The IPO of DOMS Industries is open today for subscription. It is one of the fastest growing stationery products manufacturers and sellers. It has a wide range of stationery and art products and is the second largest player in the Indian branded stationery and art market. The market for this industry also is growing continuously, and DOMS has made a strong brand presence. It is extremely popular and has shown consistent growth over the last few years. Also, its pricing strategy is focused on high growth target audience. Through this IPO, the company plans to raise 1200 crores, out of which 350 is fresh issue and 850 is offer for sale. The funds raised through this IPO are going to be utilized for establishing a new manufacturing facility and its general corporate purposes. The company already operates a network of 13 manufacturing facilities in Gujarat, which covers around 34 acres of land and is one of the largest stationery manufacturing facilities in India. It manages 4,000 plus distributors across the country, and it also exports its products. 6 months ending September 30th, 2023, the product exports yielded a revenue of roughly 144 crores. The company has a presence outside India also in around 40 countries in the Asia Pacific region, European and the Middle East markets. The PE values around 45 times with a market cap of 4793 crores. So it doesn't look overpriced to me. Of course, there are some risks inherent like in any other business. Number one, it relies heavily on one of its key products, that is wooden pencils, which contributes a big percentage to its gross product and product sales, and any disruption or decrease in demand of this product could impact the company's business. Number two, it depends on Fabrica Italiana Lapis Group mainly for export sale, which is also one of the promoters. Also, if they no longer remain the promoter, the business might get severely affected. There may be a disruption in operations and finance. Number three, company relies on limited suppliers for certain raw materials. And number four, company relies heavily on its general trade distribution network, which contributes to more than 70% of the gross product sales in the last 3 years. Any efficiency in managing this network can harm the business operations and finances. Nevertheless, I find them quite reasonable at these levels. And in the grey market, it's already trading at a premium of 400 plus, so listing gains can also be expected. Also, medium to long term growth potential looks good.